Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about some of the best stocks that analysts absolutely love that are on the stock market that you can also buy right now. So as you can see, I've created a spreadsheet, and it has around 50 different stocks on it that were randomly picked, and it basically just has some of the top 50 stocks in the S&P 500. Now, all of them aren't in the S&P 500, but the majority of them are, and it goes that we have the ticker name over here, so we're going to take Amazon for an example. Their stock ticker symbol is AMZN. Their current stock price has been updated along with their low end price target and their high end price targets according to analysts, and their current stock price is around $3,252. Their low end price target according to analysts for 2023, the beginning of 2023, is $3,771, and the high end price prediction for the stock is $5,000. Now I also have something over here called value. Now this was estimated by various analysts from various institutions as well as myself using the discounted free cash flow model along with the LA Stevens model. Then lastly, we have analyst rankings. So for instance, 98% of analysts say that Amazon is a good buying opportunity, and it's 98% of the 55 analysts that have actually given a price target and a price prediction for the Amazon stock. So this does not incorporate all analysts, just the 55 that have actually put a price target on the stock. For extra information, if you stumbled across a company that you haven't heard of before, I have the industry sector and or space that the company mainly operates in. So of course for Amazon, they operate in a plethora of different sectors and spaces. However, I'm going to define them as an e-commerce giant, and we can see that this goes out through all of the various stocks. We have about 50 in here in total that cover a very wide range of different sectors, growth stocks, value stocks, dividend stocks, doesn't really matter. We have a lot of different types of stocks here that you should find very useful. But with that being said, we're going to use this spreadsheet to determine what are the best stocks to buy according to analysts. So what we're going to do, we're going to filter through all of these stocks, and we're going to put the analyst ranking as our number one priority when we go and we filter through all of these different stocks. So all I'm going to do is press analyst ranking, and then I'm going to press this filter button, and then I'm going to filter A to Z, and here we're going to start off with the lowest ranking among analysts. Now again, this doesn't mean that the companies are necessarily bad if they have a low analyst ranking. It just means that analysts aren't particularly bullish on this stock at this current time. But with that being said, in last place, we actually have a super big shock, and it's Berkshire Hathaway, which is a company that Warren Buffett owns. This is literally Warren Buffett's company. The current stock price is $322. The low end price target is $327, and the high end price target is $347. Surprisingly, out of 5 analysts, only 20% of them rate this company as a buy or as a strong buy. And as you can see, I will slowly scroll down, and there is a lot of fantastic companies that analysts aren't particularly bullish about, such as Intel, Verizon, and AT&T. Now, Verizon and AT&T are clearly strong dividend stocks that you should own, and not necessarily growth stocks, which the analysts on this spreadsheet tend to favor by far. So now I'm just going to slowly scroll down so we can see what analysts are ranking these various stocks at. However, just in this little square that you can see from the spreadsheet, we went to about a 20% analyst ranking all the way to a 61%. Now, honestly, I would look out for stocks that have above a 75% buy rating from analysts if you decide to follow what analysts are saying, because sometimes analysts are wrong. A perfect example of that is Tesla. Analysts hated Tesla's TSLA stock, and look where Tesla is trading at right now. So right now, I'm just going to scroll down, and we're going to get to our 75% analyst acceptance rate, and we're going to start with Nike. And I'm sure you're pretty shocked to find Netflix, Home Depot, and Citigroup along with Boeing and Merck in this same square below 75% acceptance from analysts. I bet you're going to agree with the top 75% because these are the companies that analysts are the most bullish on if you actually care what analysts think. And here is our top square going from 74 to 75% all the way up to almost 100%. So I think it's best for us to work backwards from here. The number one pick clearly is Amazon. Amazon is a fantastic company. They have fantastic price targets, and they have a 98% analyst acceptance rate out of 55 analysts, which is absolutely astounding. We can also see other major tech companies such as Alphabet and Microsoft up here ranking in at about a 95 and 96 acceptance rating from analysts. However, it seems that Apple is actually in our number 6th spot with only 85% of 42 analysts very bullish bullish on this particular company. However, I would say anything from 75 and up are fantastic companies according to analysts. And we can also see, again, their stock ticker symbol, the company's name, their current stock price, their low-end price target, their high-end price target, and their value target. But what if we don't care about what analysts say? What if we just look at the current price compared to their low-end price target or their high-end price target? So we're going to start by comparing their lowest price just to the lowest price target, because this could signify a fantastic buying opportunity and a great deal for us if we want to buy the stock. And that's where this column comes in with deals. We want this to be as high as possible. So anything over 0.9 is going to be phenomenal. So again, all we have to do is click filter. We're going to do Z to A, and we're going to start off on our top 10 list instead of vice versa like we did last time. But if you're still interested, you can still see what analysts rank these stocks at if you're curious. But I'm basing this off of dividing their low end price target by their current stock price target, and that's how we're getting this value. And again, the higher the value, the better deal it is for us when comparing their current stock price to their low end price targets. Not surprising, Amazon came in at number 1 yet again, but the other ones have changed rather drastically. For instance, Berkshire Hathaway, which was our last pick in the last slide, is now coming in at number 3, even though they only have 20% of analysts saying that the stock is a buy. Now, I personally love Berkshire Hathaway, and I do own this company because of their price appreciation over the last couple of years on top of their low end price target, because the stock is trading at a discount in my personal opinion. Now, I personally own this company, the main reason being that the current stock price is trading well below their low end price target, and it's enough to rank them in our number 3 spot. We also have other stocks like Alibaba, Verizon, Microsoft, and Visa. Now, Microsoft already ranked very highly because they come in at a 95% acceptance rating from analysts, but they also have great stock price appreciation because that gives us more growth potential overall. Now, I am going to scroll down just so you guys can see some of the other companies that are on this list that didn't make the top 10 or even the top 15, and a lot of these are going to surprise you, such as Disney. Disney only came in at a 0.88 because it currently trades at $156, while the low-end price target is $137. However, this brings us to our high deal values, so we're going to compare the current stock price to the high-end price target. So if you are a very bullish investor and you're very positive on a lot of these companies, this is going to be the slide for you. So let me click over to our next slide, and now our deal values have changed, and all I have to do is press the filter button and filter through all of them. And surprisingly, Alibaba is our number 1 pick because the current stock price is $132 because it has pulled back drastically due to turmoil over in China and because of China's new regulations and policies for various megacorp companies. So if this price target is accurate according to analysts, Alibaba could more than double according to its current deal value of 2.39, which we also see some other companies that are phenomenal, such as PayPal. PayPal's current price has pulled back dramatically lately, and their high-end price target goes all the way up to $366, which gives us almost an opportunity to double our money. A little bit lower on the list, we have Disney and Meta Platforms as well as General Electric. So I'm going to continue to scroll down just if you guys want to see what else is over here. Surprisingly, Microsoft and Boeing are not higher on this particular list, but again, the price targets could change in the future, and they will change in the future, so it also depends on when you actually watch this video. Lastly, I want to compare these stocks' current stock price to the value that either I have calculated or other analysts have calculated as their fair value price, and that's really what I go off of. I don't necessarily invest into a company simply based off of either what analysts say about it or their low or high end price targets. I am more concerned about the value of the company and what the company should be trading at given its future projected either earnings or revenues. So for our last slide, we're going to go over and we're going to click the good value slide, and we're going to filter through all of these so we can find the best possible stocks to buy in my personal opinion, apart from what analysts are saying. Not surprisingly, in our top spot we have Alibaba, followed by AT&T, General Electric, Amazon, Alphabet, Meta Platforms, Citigroup, Intel, Comcast, Comcast, Merck, and many other companies. A lot of these companies are actually my favorite companies that I decide to invest into very often. And for our buy zone, we clearly want the stock to be above 1.05, and all of these companies are, most likely starting with Starbucks, because Starbucks still has fantastic growth opportunity according to their fair value estimates, along with many of their high-end price predictions according to analysts. However, if you want to have more dividend blue chip stocks, feel free to invest into Johnson & Johnson and Coca-Cola that still have a decent upside opportunity, but overall here are the top companies that you're going to want to pay attention to over the next year to determine if these truly are the best companies that you could invest into. But what do you all think? Comment your thoughts down below. Remember to smash the like button for more videos like this one, subscribe if you are new, and I will see you in the next YT video.